Hello everybody, I'm Evelyn Henry of TaxPlus, and today I want to talk to you about 2 new deductions and 2 new credits you may be able to use on your tax return this upcoming tax season. Now the first one is an increase in the standard deduction. Now although the IRS does increase the standard deduction for each filing status every year, you may be able to increase your standard deduction by the amount that you pay in real estate taxes for your main home, plus any net loss attributed to any federally declared disaster area. So that can be huge for those who are not itemizing on their tax returns. And that includes those that, although if you try to itemize it doesn't equal more than your standard deduction, then you may be able to use your standard deduction and add on your real estate taxes that you pay, and again any net loss from an attributed federally declared disaster area. Also, there is an increased exemption amount. You may be able to add up to $500 per person if you provided housing for any person who was displaced from their main home due to the storms, tornadoes, or flooding in any Midwestern disaster area. The added exemption amount is limited to $2,000. And in order to receive this added exemption, you could not have received any rent or any other compensation in return for housing this person, and the person cannot be your spouse or your dependent. So if you did a good deed for someone and housing them when they were displaced, then you may be able to take an increased exemption up to $2,000 on your tax return. The next is a credit, and it's the recovery rebate credit. Now, you may be able to take this credit if you did not receive that economic stimulus payment that was sent out, or if you received less than $600, $1,200 for married filing joint, plus $300 for each qualifying child. So if you did not receive the economic stimulus payment, then you may be eligible to receive this credit on your tax return this tax season. The next one is also a credit, and it's for first-time home buyers. It's a first-time home buyer credit, and if you bought your home, you may be eligible if you bought your home after April the 8th of 2008. And also another good thing is that according to the IRS, that you are considered a first-time home buyer if you did not own any main home during the 3-year period ending on the day you purchased this new home. So it doesn't necessarily mean that you never owned a home, but as long as you didn't own a home 3 years ago, for the last 3 years, then you would be considered a first-time home buyer, and you may be eligible for this credit. Now, I broke those two up into deductions and credits, and I just wanted to make a note to you that deductions reduce your income and credits reduce only tax. So if you don't have any tax, if you don't have taxable income, then you would not be eligible to take any of the credits. Okay, so that's it right now, and I invite you to visit our website at TaxPlus1040.com, where we have a small business section with additional information, and I'll be updating that information as I get updated information from the IRS. I hope this information was helpful to you. Again, my name is Evelyn Henry. Thank you. Bye-bye.